global financial landscape has just been seismically altered in a move that nobody outside the highest echelons of power saw coming. And if you're just joining us, you are witnessing financial history unfold in real time on this channel. We have breaking, confirmed reports that the Central Bank of Iraq, in a clandestine and stunningly coordinated operation with the Iraqi government and key international bodies, has just announced a full-scale revaluation of the Iraqi Dinar, effectively catapulting its value from its previously held rate to a new fixed exchange rate that is sending shockwaves through every major trading floor and central bank from Washington to Beijing. This isn't a minor adjustment or a hopeful rumor. This is a complete and deliberate restructuring of Iraq's currency, a move so audacious that it instantly rendered the nation from an economic backwater into a formidable oil-rich powerhouse on the global stage. The new rate, we're confirming from multiple sources within the Baghdad-based financial community, has been set at $1 to 1.35 Iraqi dinar, a figure so staggering it defies years of conventional economic wisdom and speculative chatter. The initial trigger for this cataclysmic shift appears to have been pulled in the dead of night, Baghdad time, with a simultaneous statement from the Prime Minister's office and the central bank, citing the culmination of years of economic reforms, unprecedented stability in oil production, which has now surpassed 5 million barrels per day, and a monumental settlement of all major international reparations from the previous era, allowing for this break. Early reactions are pouring in, and they are nothing short of chaotic. Stock exchange has just halted trading for all major oil and banking stocks as analysts scramble to reassess their valuations. The forex market is in absolute pandemonium, with the dinar pair experiencing volatility not seen since the Swiss franc unpegged from the euro a decade ago, and we are receiving unconfirmed reports of emergency meeting. The implications are immediate and brutal for short sellers and currency speculators who have bet against the dinar, with billions in paper wealth being vaporized in moments. On the flip side, the handful of funds and individual investors who held long-term positions in the currency are seeing returns that defy all rational calculation, creating instant millionaires and perhaps even billionaires overnight. This revaluation fundamentally rewrites the economic map of the Middle East, instantly granting Iraq a GDP per capita that rivals and potentially surpasses its wealthiest Gulf neighbors, and giving it a purchasing power that can trigger a massive infrastructure and import boom, sucking in goods and services from Europe and Asia at an unprecedented rate. But the real geopolitical shockwave is the sheer demonstration of sovereign economic power. By executing this move with such secrecy and precision, Iraq has sent a clear message to the world that it is no longer a client state or a playground for foreign interests, but a master of its own destiny, capable of wielding its vast oil and now its powerful currency as tools of immense diplomatic influence. The questions now are overwhelming. How would Iran and Saudi Arabia react to this new economic titan on their doorstep? What does this mean for the petrodollar system, as a major oil producer now has a currency that is itself a strong store of value? And most critically for the global economy, is it the first domino to fall in a wider reassessment of currency values across the developing world? Stay with us, because this story is moving at lightning speed, and we have a team of analysts on standby to dissect every single development. Do not click away, as the next hour will determine the financial fate of millions. The immediate aftermath of the revaluation announcement is a tale of two worlds colliding in real time, creating a global financial split screen that is both breathtaking and terrifying to behold. On one side, within Iraq's borders, the scenes are nothing short of euphoric, with spontaneous celebrations erupting in the streets of Baghdad and Basra as citizens who have endured decades of war and economic hardship are suddenly waking up to the reality that their life savings held in dinar have multiplied in value by over 1,000 times, effectively transforming a population that was largely struggling into one with immense. We are receiving live cell phone footage from our contacts in the Karada district, showing crowds cheering, waving flags, and honking car horns, a collective national catharsis that is rewriting the very social fabric of the nation in a single morning. However, this domestic jubilation is starkly contrasted by the cold, hard panic now gripping international financial institutions. Major global banks with significant exposure to Middle Eastern debt and currency derivatives are reportedly conducting emergency asset reviews as the balance of power for lending has just been upended with Iraqi entities or even the government almost tripling, potentially triggering a wave of early repayments that could flood the banking system with liquidity and disrupt long-term lending models. Simultaneously, the shock has hit the bond markets, where Iraqi sovereign bonds, once considered high yield and high risk, are now being frantically reevaluated as premier rock-solid assets, causing their yields to plummet and their prices to skyrocket, which in turn is pulling capital away from other emerging markets, creating a vacuum that is causing currencies and nations from Egypt, Argentina to wobble under the sudden shift in inbound. The real sting, however, is being felt in the corridors of power in Washington and Brussels, where policymakers are grappling with a new economic reality they did not anticipate. For years, the strategic calculus was built around a weak dinar and a dependent rock, but now the currency is strong. The rock no longer needs to seek favorable trade terms or financial aid, and it can dictate its own conditions for its vast oil, denominated oil contracts, and embracing bilateral trade agreements in its own now powerful currency, a move that would directly challenge the hegemony of the US dollar as the world's sole reserve currency. Early signs of this already emerging from our sources in the region. The Iraqi oil ministry has just issued a terse statement indicating it is reviewing all international contracts, a phrase that has sent a fresh wave of anxiety through the global energy sector and caused Brent crude futures to spike by over 8% on supply fears and new pricing uncertainties. Furthermore, the geopolitical dominoes are beginning to fall. Iran, which has long exerted influence over its neighbor, is now facing an Iraq that is economically superior and thus politically more independent, while Saudi Arabia and the UAE are forced to confront a new rival for regional economic leadership, one backed not just by oil, but by a formidable currency. This isn't just a financial event, it is a full-spectrum shift in global power dynamics, and the initial reactions from world leaders have been a mixture of cautious, formal congratulations and behind-the-scenes alarm, with the White House issuing a brief statement welcoming Iraq's economic progress, while the Treasury Department is, according to insiders, in a state of controlled chaos, running economic impact scenarios that range from the global financial order. The genie is out of the bottle, and there is no putting it back. The question is no longer if the global markets will be permanently changed, but how deep and how painful the process of adaptation will be for the established economic powers who suddenly find the playbook obsolete. So where do we go from this mode of absolute financial corruption as the dust begins to settle on the usual world in the span of a single news cycle? The long-term implications are now coming into a sharper, more terrifying focus, and the path forward is fraught with both unprecedented opportunity and existential risk for every single person watching this broadcast, because the ripple effects of this revaluation will touch everything from the gas you pump into your car to the stability of your retirement portfolio and the very balance of power on the world stage. The first and most immediate global consequence will be a massive wave of inflation as Iraq, now holding a currency of immense strength, unleashes a tidal wave of pent-up demand onto the world economy. Imagine a nation of over 40 million people suddenly possessing collective purchasing power of a superpower, all seeking to buy everything they've been deprived of for generations, from the latest automobiles and smartphones to advanced housing developments. This surge in demand will create severe supply chain bottlenecks for everything, from construction materials to consumer electronics, driving up prices worldwide and forcing central banks in Europe and America to make an impossible choice, continue to fight the inflation they were already battling by raising interest rates into a slowing economy, potentially triggering a deep global recession or accept a new higher baseline of inflation then. Furthermore, the geopolitical chessboard has been completely reset. Iraq is no longer a pawn or a king, and its first move will be closely watched by every major capital. We are already hearing credible reports from diplomatic sources that China has dispatched a high-level delegation to Baghdad, ready to offer massive infrastructure partnerships and technology transfers in exchange for preferential access to Iraqi oil, paid for in yuan or even directly in dinar, a move that would significantly bolster Beijing's campaign to internationalize the yuan and directly challenge the petrodollar system that has. Meanwhile, the United States and its European allies are in a defensive position, forced to negotiate from a point of weakness for the first time in decades, needing to offer concessions on technology, military cooperation, and political support simply to maintain their economic foothold in this newly empowered nation. For the individual investor and the global citizen, the landscape is equally transformed. The era of easy speculation is over, and we have entered a period of brutal volatility and realignment where traditional assets like the S&P 500 and certain bonds may stagnate under the weight of high interest rates and economic uncertainty, while new opportunities in Middle Eastern markets and commodities related to the coming Iraqi. New drivers of growth. The greatest risk, however, lies in the instability this sudden shift creates. Such a rapid transfer of wealth and power never occurs peacefully in the annals of history, and the potential for retaliatory economic measures, covert operations to destabilize the new Iraqi government, or even regional conflict as neighbors adjust to this new reality. The Iraqi Dinar revaluation of 2025 will be remembered not merely as a financial event, but as a definitive geopolitical trigger in the mid-21st century, the moment the world pivoted from a unipolar system to a fragmented, multipolar, and infinitely more complex and dangerous arena. This is the new reality we all must navigate. What you do with this information ends will define your financial future in this new era. This is not the end of the story. It is the very beginning of a global economic revolution. We will be the ones tracking every single development, from the backroom deals in Baghdad to the emergency meetings in Washington. Your financial survival depends on staying informed. So take action right now. Hit that subscribe button and ring the notification bell, because you will not get this level of breaking, deep, and unfiltered analysis anywhere else. We are your front line in the new economic war. Join us and let's navigate this new world together.